We are live. Off we go. We had some headlines hit overnight. Really in the last hour or so. I'll show you here on financialjuice.com. Now it's buried below a bunch of other headlines, but yields are dropping. Here's what's happening. So, some news coming out of Iran. Military vessels not included in the draft agreement. Management and route of ship traffic through Strait of Hormuz will be handled by Iran in cooperation with Oman. Let's see here. Restoring a number of commercial transit ships through the Hormuz Strait to pre-war levels within 1 month. So the reaction to this is the breaking news I saw here in the last maybe hour or so. U.S. military forces will withdraw from vicinity of Iran and lift naval blockade. Okay, so anyway, saw a jump in futures, and futures up around 0.2%, which gave some of it back. This is already at 0.2 when I came to the markets this morning, and it jumped up to like 0.4, 0.42 or 0.43. Here is the live feed of SPX. So this little candle is what the jump was this morning, as I was watching the last hour. So that jump, and we've given it back already. So we're just kind of stuck, which is fine. But interestingly enough, on the CFD, so the SPX 500, we had the overnight high here, and we just poked a fresh overnight high. It's going to be a interesting setup wise. I'd love to sell some premium for daily profit play. However, I am not seeing a huge read on the plus minus day is 35.09. So yesterday, I feel like we were lucky to have a 55.91 kind of priced in for a pre-market expected move. And, the market essentially moved, I think, from start to finish, like 8 points, right? From open to close, market moved about 8 points. So today is a little bit tighter. We do have a positive gamma profile, which means that we're above 74.95. So we're up about 40 points into that positive gamma environment. It looks like we have something pseudo sticky around like 75.30. But, could we drift one way or the other? Sure, we could. I don't know. I'm just kind of thinking out loud here as I plan for the day. I mean, it's Wednesday. Usually Wednesdays are somewhat efficient. Our plus or minus move is not super big. But I would say if I can look at some, I want to check the premiums on the bear call spread side. I want to see what the deltas are this morning. If I'm looking to trade around like 75 or 80 today, probably playing defense around like the 7,600 zone. And then as long as I can get something, a bounce or protective level off the HVL, which is that positive negative gamma pivot point that I talk about quite a bit. If we hold, let's say 7,500, and we don't breach that level, 74, like 80 or 70 or something like that down here. So I'm looking at maybe like a 74, 75 and a 75, 85. That's kind of where I'm kind of ballparking my iron condor for daily profit play. So, high around 85, low around 65. That may be way too conservative, because if we're trading at 35, I mean, that's going 50 points higher, and that's going, almost 60 to 70 points lower with a plus minus 35. I mean, you're almost getting like a 2x move down here, right? Not quite, but almost a 2x move. And then here's like that 1.5. So, I mean, I see a lot of gamma at 75. It may just have a slight drift on the day. We'll see. I mean, last night, if you looked at the pricing from, let's go mags for a second. So mags is down slightly, but not a ton. Apple is down just a couple cents, 30 cents pre-market. Amazon's down about 30 cents pre-market. Broadcom's up $10 pre-market. So chips are crushing it, man. SMH, SOXX, they're way higher. That a huge thrust to the upside. Micron, a chip company, is now over $1 trillion market cap. Ridiculous. Like, this is ridiculous. It's at some point they're going to be fantastic. I feel like they're going to be fantastic shorting opportunities, but man, it's so hard to know when. Timing wise, it's like you have no idea. Um, I guess I could always take a low risk trade, you know. But if it's a stock, it's like you have that potential like 2 to 3% assignment risk, and I obviously don't want to be on the wrong side of a move. So anyway, Meta, just looking through, I mean, what's up and down pre-market. So Google's down a couple bucks pre-market. Meta's down about $4. Microsoft down about $4. Nvidia is up 30 cents. Tesla's up about $8. Is anybody trading NASA? We talked about this one a couple of times. NASA's up, it had a nice little gap to the upside. We're up another, 90 cents today. I've got some chart alarms set at the round numbers, 50, 60, and so on. As this SpaceX IPO nears, hopefully this one is going to continue to get some love to the upside, and that could be a fun one to grab some profit before the IPO or right around the IPO if we have like an open and pop to the upside. But semiconductors, here's your SMH, another $13, $14 higher from yesterday's close, which was already, look at this run, by the way. This last little, like this dip and run is already up 17% on SMH. If you go SOXX, that's up 20, almost 23%. And that's with pre-market today. So just crazy. And here's Micron. Up 50 to 60 bucks overnight. Look at that thing. $65 from yesterday's close, and it's already crushing it. That little pullback in May, it's up 47% in the last, 10 days? Insane. Pete, good comment there. If oil comes back down, which it looks like it's fallen a little bit, other markets look more attractive. Yeah, I mean, I'm here's my diversification. I mean, VT is my global market. I'm long VT. I've been long since this dip. I've been long, VT when I want the global exposure. So VT is always a good one for me to add. I think this is also a way to see the world. If the world does okay, the world does. That's the thing is like the U.S. has to do great to justify these valuations. The world just has to do okay. So I mean, I mean, the whole world is still going to rely on the US. I mean, the US can't suck and the world's like, "Oh, we got it from here." It doesn't really work that way. Usually the US has to be at least stable and resilient to keep the world floating and liquid and pumping higher. But the world can outperform the US. The US can just have like steady, 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 and the world can do great and outperform. But I think the US at this point, it's like we're kind of showing the resiliency, and we have this potential boom that's just still running off these reflexive rallies. And like I keep going back to, it's like it's just not something I feel comfortable shorting. It's like enjoy whatever this is, the melt up, enjoy the persistentness or the persistence of bullishness, like way more than not. But looking at the bigger picture, looking at the technicals, this would be 9 weeks in a row in the S&P of higher closes. That doesn't happen very often. You can go back and look at the stats. I mean, maybe the last time we had 9 weeks in a row would be 20, 30, 40 years ago or something like that. Like it doesn't happen very often. And so we keep kind of reaching these extremes, but more than likely they'll matter. Having 8 weeks in a row is a lot. Having 9 weeks in a row, if we close this week with a positive candle and a higher close, 9 weeks in a row, I mean, I'm skeptical going into June that we're going to have a 10th and 11th and 12th week in a row. It could happen, but it just becomes more and more like the probability just goes down quite a bit. Okay. Let's see here. Do you know what's driving FTX up so sharply? No, I don't. Are they cutting? Are they cutting drivers? I mean, UPS and FedEx. I mean, FedEx has been performing so much better than UPS lately. We have earnings on FedEx that's out to June, so I'm not really sure what the driving factor is. Is there any real time news? FedEx fully redeem, maintain to a buy. All right, let's see if there's anything on like FinViz. FinViz, FDX. See if there's anything here news wise. So we had JP Morgan upgrade, HSBC upgrade, Some of the parts valuation points to upside as freight spinoff approaches. Are they going to spin off? So is it going to be like FedEx freight transportation into FedEx logistics or something? That could be part of it. That was a couple days ago. FedEx led $9 billion buyout offer in post. Tighten U.S. freight capacity. I mean, same stuff you can see. So yeah, I don't know. I mean, it's certainly better than UPS though. FedEx off of these, April 2025 lows for a little shipping company. That's up 107%. And UPS, on the other hand, isn't that crazy, man? It's like, don't they do the same thing? And this stock is down, 58% from recent all-time highs. I know UPS has a lot more on the like driver employee liability side. Their pension plans are killing them. It's kind of being priced out like a Ford or General Motors, but UPS just can't catch a bid compared to FedEx. So very different. Clearly, one's a winner, one's not. But do I want to buy all-time highs? Not really. Let's see what it is fundamentally. I mean, Snowflake looks good. 21 times earnings. That's pretty impressive. That's crazy, actually. This doesn't make me want to buy it. Fudge, man. I feel like the premiums are not going to reward me if I want to go to like a $200 ratio spread. Highly doubtful. Let's go FDX. I doubt the premiums are any good under like $300. If I go to January 27, yeah, I mean premiums get pretty bad around like $250. I'll look at it though. I mean, Liberation Day lows at $200. I mean, all the support here around the 300 handle. But if some weird spinoff is going to happen, I don't want to be like stuck as a bag holder if this is going to split off and be like FDX transportation, FDX logistics, and all of a sudden my option thing's going to be weird, right? Saw a comment today that half the U.S. GDP came from AI spend. That's not a surprise. I mean, I'm curious what the percentage of building is too. Like, we're onshoring manufacturing. Okay. Or what about like residential construction? Stalling. House prices are still high. Interest rates are still high. So where's all the construction? Data centers, AI buildouts, the grid, space bubble forming, upgrade today. Okay. Seasonality. And sort of earnings. I mean, we can take a look at them. We can price them out. They're not huge market caps though. I'm a little cautious. And somebody brought one of my attention today called Zscaler, ZS. I mean, it's down $40. The expected move was 11%. It dropped over 20. Like I think that we just have so many trades that are like, yep, it's up, double the expected move. It's like it's a hard earning season. If you want to sell premium, which is usually my default strategy is selling premium, I don't want a 2-3x move, right? I want price to be, overhyped, and I want price to go nowhere, and I want to make, 100+% on a calendar spread and not have the market, have to run 2x its expected move to make any money. So, yeah, I mean, looking at those tickers, for example, it's like they all have the potential to move. I mean, you're talking like Dell just got a huge bid in the market. I'm curious what that does for earnings, but it's like it's hyped, right? Marvel Tech, Snowflake, they're hyped. HP, Hewlett Packard, it's like in this anything that's like touched by AI is being like it's like the Midas touch of like you have volatility and you have volatility and you're going to do crazy things now, and it just seems like there's not really. I just want to trade normal, you know, and so for stuff like that with earnings, it's like I don't mind just sitting on the sidelines and not guessing where it's going to go, because my least favorite trade is all right. So the implied move says this, right? And let's say price is in the middle. The implied move said that this, and let's say this is greater than the normal, right? But then because it's this year in Q1 earnings have been like really rewarded or really punished, all of a sudden this is where price actually goes, and it's not even close to getting the right calculated move with a broker. It's like, I don't wanna be on that trade. I mean, this is why defining risk is so important. It's like, I don't wanna be, throwing a bunch of money at this and being wrong. So we're just seeing more outsized move. That's my point. Year-end statistics, yeah, they're all higher. Everyone's gravitating towards the 8,000 handle now. Yep, I agree. Yep, we're still moving. So we are pre-market. Actually, futures is fading quite a bit. So we were up here about like 0.4%, zero point 0.4 and change, poke these fresh all-time highs in the CFD. Now we're dropping. So that makes for an interesting day. A lot of this is happening pre-market, man. Like this is up to around 74, 75.50, and it's given like 20 points back. So 75.30 seems somewhat sticky. We got the HVL around 74.95. Um, Most likely, and this might be a little gutsy here, but if we're trading around 75.30, I'm going to let price maybe try to come to me around like a 70, 75, 80 area for a bear call spread. I might do some combos. I might see if I can get some, early credit. I might play some defense up here towards 7,600. Um, but we'll see. We'll see. It's like it's funny. Like every day, I'm like, yeah, I'm just a little cautious. I mean, what I don't like today is that the plus minus is 35.09. That's what I don't like because it wouldn't take much for the market to exceed that or breach that, and so I want to make sure like I'm being pretty conservative on my highs and lows. So we'll see. I mean, structure wise, this could be another range trade where we test the highs, we come back and try to find 7,500. Right, we come down here, try to find 7,500. This inefficiency candle from whatever this was like overnight, like this would have been like when Monday's trading started, or I guess Monday night's trading started. You had this huge candle to the upside. If we break below 7,500, I feel like 74.50 could be found very quickly. So if we are lucky with the structure, it holds here, works its way down, holds, and then maybe stays inside the range. But if it breaks that structure, like I said, we find the inefficiency very quickly. We give some of this back and just measure the move, and all of a sudden we're talking 74.50 is very realistic. So anyway, could be an interesting day. Do we head back down towards 7,500? Maybe. We have recent highs. I'll see what the premium side looks like. But I unfortunately I don't really have a good read on gamma. I mean, there's really no pin price at 7,500. There's the positive negative gamma pivot point, which is 7,495. So if we want to go towards that today, that might be a spot to look for. But we'll see. Trump holding cabinet meeting. Iran, White House. We'll see if he takes reporters' questions. All right. So I'll calculate. I was doing some pre-market stuff. Those are my blue lines representing the kind of the high and low I was looking at for the day. Right now, futures is now in single digit territory from a 0.4% gap higher. So just key level to watch 7495. If we fall towards it, there's the candle that the market may be kind of trying to chew into as far as inefficiency goes. If it's low enough risk, I may take a trade down here if it's low enough risk and see if price wants to gravitate towards it today. If it's out of the money, let's say it's 25, 30 points out of the money, maybe that's a $2-3 debit if we gravitate towards it. But I'm probably going to keep risk somewhat small today. I might look at a XSP. That would be 749. 749 XSP could be a pretty good iron fly to trade if we're going to hang out at that level. If it's down to this area and then we still have like the 75 30 zone or even the highs at 75.50, I mean maybe some XSP flies today. If we have price, this actually would be a nice sign too for Flashpoint. Let's say that price opens up and does fall down here. Well, if Flashpoint activates and we bounce back up, there's another opportunity for an intraday winner. Okay, Randy 3509. You can check your broker on that, right? I see you type that question almost every single day. You have it in your broker platform. Here's SPX. Look at the expiration. May 27th, 35.09. Do I have anybody that has Think or Swim up? Is it higher or lower? It's probably lower, but what's Think or Swim today's plus or minus move? Oh, you have Think or Swim? Okay. 3208. Okay, so a couple points lower. Got it. Remain elevated through WTI's lower. Yeah, I mean, oil prices I still think are going to be volatile. Yes, oil's falling. I mean, that's a pretty severe candle. But there's most likely going to be support found in here. Support, support down here, maybe around $80. If we fall to 80, we probably bounce back up. I think right now the markets are going to be okay with as long as oil's less than $100. 80 might be the destination, but I don't think we're going to go too much lower than 80. Now without more resolution or major deflation. So also another positive sign for risk appetite right now is that yields are falling. That's a pretty abrupt pivot from yields up to about 4.68, dropping down to 4.47. I mean, that's reasonable, right? That's 30 to 40 basis points. Question is it going to continue with that path to the downside, or are we going to maybe come back up and threaten that 4.6 again? When I warned like the 4.6, I think it's Mike Edwards from Morgan Stanley, 4.6 to 5% is the if you're in the traffic light, this is kind of your yellow to red. Like red lights up here, okay, yellow lights in the middle, green light would be back below like structure here, green light if we're returning to those levels. So green, yellow for caution, red for all right, we got a problem. If yields are up to 5+%, that's going to choke out growth in a big way. Yeah, the scary part is you think of the semiconductor space, you think of the AI trade. It's like so many components of the stock market are touched, exposed, and kind of all in with AI. And again, that's a blanketed term, but whether it's the data centers, the picks and shovels, the AI hype, the chips, the computing power, I mean, it's so much of the growth and so much of the optimism, so much of the gains have been in that space. So, a rotation could make things interesting. But I still think this is also I don't know if I have that same analog that we talked about maybe it was last week, the week before. I don't know where it is. It was oh crap, what was it? Oh, it was like the last time we had all-time highs while less than 60% of the market breadth was above their 50 and 200-day moving averages. It was like 1998. And so if we're in the early stages of like this bubble buildup, we could still have another year or two of ups in all-time highs, which is why it's hard to say like this is the top. I mean, look, you're going to see it on Twitter, you're going to see it on freaking YouTube. It's going to be everyone's like calling for the bear market, and it's going to be so bad. Nobody knows when. I mean, people are saying like, oh, when all these companies go public, it's going to be the top of the market. Is it? Or is it going to be 3 months later, 6 months later, when all the the private investors are made whole with 20 to 30 times their investment, and then they want to get out, and all of a sudden there's a market dump. I mean, there's going to be plenty of hype around chasing these big IPO names, and possibly it's a IPO that opens and rips up and fades all the way back down, and then maybe has a real bid. But that right there could be extremely exciting in the next 30 to 60 days if there's just billions and billions and billions of dollars poured into these IPOs. So between, June to October, we're still in this really interesting IPO window, led by some of the biggest banks in the world that are like salivating at how much money they're going to make in these IPOs. And I mean, to get these things in the Nasdaq within a couple of weeks, it's crazy how like you are fast tracking these companies to like $1 trillion market cap. I mean, I don't know what to make of it other than be ready for some, I don't know, just I'd say wild and crazy trading ahead. Okay. So, all right. Opening bell here in 1 minute. Markets have given back a little bit. We're at 0.09 positive. We're going to have a small gap to the upside, plus or minus 35.09 on the day. I'll use my gap adjusted. By the way, I do have an update. I'll talk about this more in a little bit, but my expected move box, I've got a second version of it, and it's not this one. This is index. This one's fine, but I finally got the graphics and the visuals that I wanted for my any ticker one. And so, if anybody has purchased my expected move box for $20, I will send you. I'll be going through all the transactions, and I'll send you emails with the new updated access. So, if you wanted Trading View, I'll go through and give you access to the expected move box all tickers, and I can show you that right here. So, invite only. This expected move box any ticker. I'll show you what this looks like here. So I'll star it. So you can now take this and put it on any ticker, and it will reference either the previous day's close or the current day's open. And you can plot this for like any ticker, any duration, any plus or minus expected move you want in your broker platform. So I finally got it clean enough where I'm like, all right, I'm happy with this now, because it kept putting on the stupid info box that I got that off. So anyway, we'll talk more about that in a little bit. Market is open. Small gap to the upside. We are in positive gamma. Okay, fine. Any crazy candidates for the day? I'm looking at like the 85 zone. Let me see what these look like for like 85, 75, 85. So it's a pretty low delta. 75, 85. This is single digits. I might look at I think I'm going to go 15 wide and play some defense here. So that's a 7 delta. Let me match that over here. 65. All right, I'm going to take this trade 15 wide and play some defense. So this is like single digit deltas. Give me $1. Give me $1.05. Okay, I'm in for $1.05 on daily profit play. That was quick. I'm doing 7 delta. I'm going pretty low delta. I'll see what price gives us, but I'm put my toe in the water right now. So new trade. Today's the 27th. And that should have just been filled here. Yep. So 7585, 7600, 7465, 7450. All right. So that's in. If somehow this trade can get up to like 1250, that's a lot less risk. Risk in 250 to make 1250. Those levels stay safe. I'll put that in as a backup plan. And now, defense wise, 70 to 55. Maybe play some defense. That's 15 wide. There's 25 wide. Tiny little debit. Let's see if this will offer up a credit. I'm going to put this in for like a 10-cent credit and kind of start a little defense campaign. All right. Pending order there for 10 cents credit. This one, maybe more of like the 90 to 05, or kind of defended in here, 80 to 95. This one's harder to get a credit on. That's too much risk. See if this is like a 10-cent credit. I'm going to put a couple pending orders in for credit. They may not fill. And then for the morning, I mean, if we just hang out between like 30 and 20 for the day, maybe have like a kind of a big flat nothing burger. I wouldn't mind looking at like an XSP iron fly for like 752 if we just kind of stay very, very sideways and choppy, which I don't know if that's going to be the case, right? But to me, it's like if we bounce off of this area or this area, let me see if I get like a 750. Just curious if the market's very flat on the day. So we opened up around, 26, 75.26. Hmm. The news is tomorrow. The big PCE is tomorrow. I'll post them. Just give me a second. I'm just debating on a 752. Let me look at a 752 XSP really quickly. I probably don't want to take this trade. It's not going to be more than like a 2-to-1. But it was 752. Let's say I went like 4 wide. So I mean I'm at like a 1.5 to 1 in price. Would have to stay inside this range the entire time. I'd almost like the 749 to be like a lower risk trade. I just don't know if it's going to stay there for the day. Like that only cost me $1. Like that's a 3-to-1. I'd take that trade all day. But is it going to stick around 7,500 for the day? I think it could find it. I just don't know if it's going to stick there. So I'll probably just hold off on forcing a trade on XSP. I like the setup. If this is true for the day, and I don't know this yet, but if this is true for the day where we're going to kind of hang out around like 20 and 30, an iron fly can get us a decent trade, but it may be a little bit more lucrative as far as profit opportunities to manage intraday would be if we stay around this price, 25, 25, and maybe we are, let's go 30 wide, something like that. So you risk, 975 to make up to $2,000. That's just over 2-to-1. But you need price. I mean, really, you just need price to chill. If price is going to be bouncing around between these levels, then that iron butterfly. Oops, that's not drawn very well. Iron butterfly looks something like this. Obviously, there's risk beyond my by buy strikes. But if price is just going to pin back and forth around 10, 15 points, 20, 25 if it trades for less, that's profit. I just don't love that like max risk right at the center. If there's any direction like this is going to look more difficult. So, not sure. That is 40 wide. You pull, I mean, it's a lot more risk for a little bit of reward. I think there's kind of that sweet spot of maybe like 35 wide or something like that, where it's okay, 1,300 to make 2,200. If you go, this is 30 wide, risking 1,000 to make 2,000. That's a 2-to-1. That's all if price is going to stay somewhat around this like 20 to 30 handle for the day, which I don't know if it will. So I'll play it safe right now based on the iron condor levels. I did a 75.85 call, so I'll put it up here. And the nice part is I actually have my iron condor now is on. It's actually beyond both my expected move, which is kind of nice. 75.85, so up here, 85, and then I did a 65 put there. So that's a pretty good size iron condor as far as getting it dollar. This should be a pretty safe trade for the day. Should be. I'm still going to play defense. I'd like to play defense just in case. We have that HVL or positive negative gamma pivot around 7,500. We have potentially gap fill around that 75 zone. But, we have HVL at 7475. If it just kind of dances around, no pressing news here, no crazy moves on a Wednesday. Price just maybe does this. We'll see where it just kind of dangles for the day. All right. But if we just stay sideways, that could be good. I'm curious. I mean, is it going to be just like a super boring day? And if it is, one way to find out is a little iron fly. That'd be around 20 to 30. So if I did more premium there, more premium there, let's go 4 wide, 4 wide. I just don't love a 1-to-1 setup on like an iron fly. If I went wider, now it's 5 wide, 5 wide. That's a 1-to-1. So as long as price is going to stay below 755 or stay above 750, this trade makes money. That'd be a 7550 SPX. Yeah, it's just a tough call. 30, so 753 may be a slightly better strike. A little bit better reward to risk. Pete, are they down? Yeah, gold down. I mean, I've said this. I think that gold. I think there's still good buys. I think you have to be patient though. If we officially we had the poke of the 200-day moving average. Um, you know, I think technically we could still end up falling to fresh lows and kind of shake out the loose hands. And nobody would like to see gold do this. As far as like, I thought gold's going to be this great investment. To me, I look at this as that's the opportunity. Like that's the opportunity to get a build back in and see if this will trough out, hold structure, and then eventually work its way back out of this for retest of those highs. Yeah, but yeah, gold, silver down. That's fine. Silver, same thing. Bitcoin still rejected off that 200-day moving average. What about copper? Not much. Platinum, PLTR. No, it's Palantir. What's platinum? There's a CFD. Platinum down a little bit. Palladium. Flat. All right. Nothing burger on dollar index. Bond market. Move index is going down. VIX. Nothing super exciting there at 17. I mean, Dow hit all-time highs last week. Russell's had a nice little comeback trade as well to fresh all-time highs. Take a look at the IWM. And that's a nice little rally of like 7 or 8% off those lows. 7.5% off those lows for a nice little comeback all-time high poke. This is still my measured move on IWM. I still, I have been bullish in IWM. I let some of the shares go. I still have partial shares running, but I have lots of ratio spreads and credit spreads running in here for that stacked income, just staggered expirations. But I'm still measuring, IWM to get up into like 300 to 320. Yeah, 302 to 325 is a symmetry move. That's just taking this swing. Low to high, low to high. It would be. Don't do it, Benji. Oh, here it comes. Hang on a second. Dog's going to throw up. Let it out, buddy. Come on, dude. NG. Ugh. Frickin' dog. You're a disgusting creature. One second. All right, dude. You're disgusting. All right. Yeah, that's fun to clean up. So, back at it. Maybe a little bit more activity around that 7,500 handle. Oh, yeah, there we go. Okay. Oh, boy. That's a pretty aggressive move here in the last few minutes. Would you stop, dude? Yep, flashpoint should be activated. Let's take a look. So we've had a little bit of movement, like 15 to 20 points. It's probably not enough to activate a flashpoint, but let's check the alert. New order came in at 940, so let's get it in. Yeah, this is a good one to have, especially if we're going to fall today. This is looking pretty good. So I'll get my flashpoint in for SPX. Let's go SPX. Pain point for today is 7450. All right, that's a very similar setup that we had yesterday. Let me get these in. So I go out to the 29th, which is going to be Friday. And 7475. So 75 by 80. Set this one up. This is going to be a pending order at a 245 debit. Good for the day. And my take profit 3.30. Okay, I'll go after 40%. And then my stop. It's going to put it in so it's a conditional order. I can always remove the stop loss if this gets activated. But that'll be my flashpoint order. So pending for the day. These are credit orders good till canceled. So that's my flashpoint level. And then tsunami levels deeper, 7425. Down here. That is a 270 debit. Good for the day. And looking after 325, I'm going to go a little bit higher than that. I'm going to go after 30%. I can always adjust my profits, but I'm going to try to go like default at like a 40 and 30% return on those two levels. And then this will be a 0.05 trigger. All right. So that should be a 270 pending order good for the day on my tsunami level. 350 credits, a 30% return. And those two pending orders are in. Okay. So it should be in one-click trading. It's in Telegram. And I've got my two pending orders good for the day. So if price is going to, see some pain, then we're going to get filled, hopefully somewhere down here towards the low end of the expected move. Let me see if my defense trade is sitting, looking a little bit better at all. Working order SPX for today. Excuse me. What happened to my defense orders? defense, defense. Okay, let me play around with the defense. So a 15 wide defense trade is now showing like a 30 to 40 cent debit. Let's maybe reposition this one. 60, like $15 defense. Still a small debit. That's annoying. Well, I didn't pull enough. I didn't pull enough credit in on the the $5 to all of a sudden be like, oh, I'll just pay 10, 15 cents and tighten this risk up. The other option would be like let's see how far away I can get. If I went, let's say 50, 55, 65. I mean, this is defense. This is worth like, I mean, it's worth $4 and something, but it's like if I get $1.05 credit out of my on my daily profit play, I need this to be, even cheaper. I need this to be like a 490 credit or 480 credit. And it's just not. This is a very low risk defense. If anybody wants low risk, like this is low risk defense. But then I don't make any money on my daily profit play. So it's still a low probability trade. There's a 2% chance of profit. It's just if you get blown out to the downside below 74.50, I don't know. I think we're just dealing with some chop. HVL is around 74.95. If the market kind of comes and tests it, it's this potential gap. So if the market's here defending this area, then we, fall down, drop, hang out, chop around, maybe stuck between 75.50, 7,500, and it's just more indecision on the day. Let me take a look and see what that XSP. I still want to look and see maybe this this gets a little bit more favorable. Not a ton, but risking 160 to make 240. Let me see if I get a pin at 20. 4 wide, 4 wide. It's not bad. How much more risk? How much more reward? That's a 1-to-1, a little bit wider. So that put me up to a break even of around, let's go 752. 752 minus 255. So 749. So if we're above 74.90 at the close today, or we're below 75, that'd be 75.50 for the day. That trade could make some money. I'm going to take this trade. I'm going to try to go 260 or 255 credit. This will be for double ups here. This is just over a 1-to-1 opportunity. I'm going to take this trade. So 260 not filling. I'm trying to get at least 255. 257 not filling. 256 and 5. Let's get 55. All right, 255 double ups coming at you. I'm going 5 wide. $255 credit. So $1. Actually, no, it'll be 245 max risk. Looking for price to stay around the 752 to 753 area for the day. So it's a 1-to-1. All right, I'm looking. By the way, really good masterclass yesterday in Flashpoint. So alerts. All right, here. I'll just let me give it to you. So if you're in my Flashpoint, the team needs to get on top of this crap and one-click trading every single morning. Okay, it'll be ready in 30 seconds. But here you go. If you're in it, just take a screenshot. This is this morning's trades. Take a screenshot. That's Flashpoint. I'm working on it for double ups. XSP is not Flashpoint. Oh, I'm sorry. There's an XSP option, but this is the trade. This is XSP for this morning. This will be posted in probably 60 seconds of one-click trading. But take a screenshot. I did my pending orders for SPX. It's posted. Yeah, it's already one-click trading. So let's go overview. Flashpoint. Alerts. Come on. That's yesterday. I just got the Telegram notification. It's right there. Yep, it's right there. It's posted. I just had to refresh. Yeah. Deanna, what exactly, what is it, what's required for a VIP member? Is it like lifetime access? What is, okay. Gotcha. Cool. All right. There you go. Double ups in Telegram. Also, double ups come to one click trading. Give the team about 60 seconds for that post. But it's in double up Telegram for my double up members. That's an XSP Iron Butterfly. We'll see if that one's going to give us. It's just over a 1-to-1 opportunity, which I'm okay with. Hopefully, take advantage of a expect a move that's going to be somewhat choppy today. So I mean, I want price to stay basically between around 75.20, 75.30 for the close. That'd be great. We'll see how this kind of develops throughout the day. It's like we're kind of getting some candidates in here between 7,500 and 75.30. So if price is in this area for the day, that actually is a pretty good look. I just picked one, Thomas. I picked SPX. It's a 2-day expiration. So here's my 29th on SPX. This is my flashpoint level. And this is my tsunami level. So if price falls towards that pain point, we get activated and we look at the little reflexive rally hit or take profit. So it's, as I said in the classroom, the concept of this class is every day, just letting price come to us, play some active defense for a high probability trade. Yesterday's masterclass, Deanna, is that still processing in our Zoom cloud, or would you have that posted in the classroom? Okay. All right, let me see. I think we were live for like just over 90 minutes yesterday, and it was recorded. So really good class yesterday. It will be here under master classes. It's not posted yet. But we covered, the discussion we did. I'll type this out really quickly. So we covered the core strategy, placing trades. So you have the, flashpoint, all-in-one trade. You have the tsunami all-in-one trade, which means that I can set the order with the take profit on a conditional order, which means if price fills me, then I already have the take profit in. So I can just put this trade in the morning and I don't have to worry about it. It's in with the pending order. The take profit is there as well. And I also have a stop loss just in case, but we are always going to manage this trade by tomorrow. So if I get filled today, I'm managing the trade by tomorrow, worst case scenario. More than likely, we get filled today and we have profit later today or profit early tomorrow, but we will have the trade managed. So it's just the nice thing is you get in the routine of setting pending orders on Flashpoint. That's it. Okay, so we discussed that. We talked about trade sizing or contract sizing. I will do that. I'm going to have a follow-up video for everyone. I'm taking all the historical tests. So we did like 340 past trades in the last like 4 years of 0DT. I'm going to do I'm just going to do the numbers on, okay, this is what the service made on just one contract trade. But I'll also do the extra math of like, okay, well, if we take a loser and we increase our contract size, what does that overall exposure look like, overall risk look like, and what's our net profit at the end of the 340 trades? So trade sizing, contract sizing, I talked about stepping up contracts. I'm also going to compare a martingale, which I'm not going to martingale. I'm never going to martingale a strategy, but I'm always curious. Like in this example, we're rarely taking tons of consecutive losses. It'd be like maybe 1 to 2 losses in a row. So I'm curious, like, would a martingale make us more money? Sure, but I don't want to have that 3rd, 4th, 5th martingale because that just becomes really, really big. And then what else we talk about? So the trade sizing there, I'll do the math. So I will update with spreadsheet review video. So that'll be end of week. That's going to be my task. And then we also talked about a SPY active repair bonus strategy. So traders willing to own the SPY and repair for income. And it's, this is kind of the all eggs in one basket and aggressively monitor basket. I mean, Salem Druckenmiller is one of my favorite hedge fund legends, and that was his style. Put it all in one thing and watch it closely. If I had one account, I would probably do a lot of that. But I obviously run a lot of services. I have a lot of accounts, and so it's not easy to do that for me. But I like the idea because you're essentially putting in a defense level every day, letting price come to you, always getting a discount. If you have an outlier type event, you can lower your cost basis right with the market, and the market's ability now in the 0-day environment to bounce up the next day by a couple of points. I mean, you can go from a credit spread that might be in some trouble to taking a quick assignment or ownership and having price, still generate like maybe $200 to $500 for almost every trade. So if we were filled, let's say 30 to 40 times a year, and you're averaging about $500 a trade, I mean, that adds up pretty nicely, right? So anyway, that was all covered in the video. So our 526 masterclass. So for any members of Flashpoint Income, if you check out the masterclass review yesterday, if you didn't attend live, we covered a lot of good stuff, and it was very organized. Last week when I did on Thursday, I know the cloud didn't record it, which it's a technical error on our end, but I also had a sick kid. He was on my lap for like the first 5 or 10 minutes. Then he's crying. Then I go upstairs. It's like, it was just it was not as organized. So we just got right into it and went from, topic. And it was a really good class. I was happy with it yesterday. Rick, is that a question? Yep. So yes, in Flashpoint, I'm never picking all three. They're the 3 same correlated instruments. So why would I trade SPY and SPX and XSP? It's all going to reflect the same type of thing. Okay, so I'm going to pick one, and that's going to be my Flashpoint trade. Scary upside move. Is it? Are we at fresh highs? No, not yet. We'll see. So what's our gamma look like for the day? Still about the same. I mean, it looks like 20 and 30 are still kind of the front runners for any type of pinning today, maybe. I do see some volume up here towards 75.50. I mean, those are the recent highs, by the way. I mean, we did have some recent highs right around 50. So, I mean, we'll see. I kind of pointed out this morning. It's like we have highs here, we have lows here. I think that it's vulnerable to the downside. And if we break the upside, like maybe I don't know if we're going to really have like a bullish day today to go outside of the or go outside the expected move. But I think that a range bound trade is real. It's where I'm positioned on double ups. I've got an iron fly right here in XSP, which is right in this center spot, which looks pretty good. And we also have our iron condor for daily profit light up here and down here. So if it stays below here, stays above here, then we have a winner for the range. If we get somewhat of the center spot of this range right now, then we can nail hopefully a nice little winner on XSP for double ups. Okay, gotcha, Rick. Thanks. Yeah, so I see these questions. What's martingale? It's pretty much the path to ruin, if you want it to be. Martingale is the type of strategy where when you lose something, you double down. So martingale is, okay, I start with one contract, and then I lose. And then I go to 2 contracts, that loses. Then I go to 4 contracts, that loses. I go to 8 contracts, and then I win. Well, if that reward to risk adds up, where it's your speed recovery when you martingale. The reason that I never liked this is because in my days of running a currency fund and working with lots of robots and algos and currencies, I saw lots and lots of martingale systems that looked great for a while until they blow up the account. So it's a very easy lesson to show that it's just one ugly drawdown away from blowing up an account. Because look, if you have trade capital and finite margin and finite buying power, you only have so many martingale trades before you can't trade anymore. And the difference for me is like, I don't mind, increasing size. So this is martingale. Okay. Versus my preference is to do a step. Okay. So I would do 1 contract, lose, 2 contracts, lose, 3 contracts, lose. Let's say 4 contracts, win. This is not going to, make all of my losses back up, but this allows me to at least, control my trade size, maybe help my speed of recovery, where instead of getting, then I go back to 1 contract. Let's say we have a win, 1 contract win, and all of a sudden we're back in black and we're at all-time highs again, whatever our growth is, right? This is a little bit more responsible because yes, I'm increasing size here, but I'm also playing the probability game of I have a strategy that wins most of the time. So I don't mind increasing on a loss because the odds of winning the next trade, it's fair. It's high. If we have like a, 70+% win rate or 80% win rate, I think the odds of winning is pretty high. So I don't mind the step increase. And that's why I wanted to take the spreadsheet that I have all the historical trades at Flashpoint and do that math for you and show you, hey, this is what it would be if we just did the same size and everything. This is our net profit. If we did a step increase where we take a loss and add at least 1 contract more, this is our net profit. If we truly martingaled, here's the amount of trades we took. What was our worst drawdown? How many trades in a row did we lose? Because I mean, yeah, we might make the most money in a martingale strategy, but the key there is you had to survive after, X amount of losses. And like I said, if all of a sudden for some reason we had like 3, 4, 5 losses in a row, not a lot of traders can take a 1, 2, 4, 8, 16 contract trade, right? That's a big difference from, yeah, I'm comfortable risking a couple $100 to like, I'm now taking thousands of dollars in risk. So martingale is just, like I said, one step. It's one bad drawdown away from blowing up an account, which is why I don't like to do it. So step increase is fine. I do that for a lot of my bots and stuff. I'll do a lot of step increase stuff. And I'll do it for a maximum amount. Like I'll max step at 5 or max step at 10, and then I'll just reset. So if something gets really, really ugly, then I'll just reset it. I won't let this go to infinity because that's just irresponsible. Make sense? Yep. Yeah, double blackjack. I mean, I know it's a big casino theory. So whether it's roulette or doubling down, it's there. If you watch the movie, what is the movie? Focus with Will Smith. He has some like ridiculous. It looks like he's just a degenerate gambler, but according to the end of the scene, it's like he had the plan the whole time. But he was essentially martingaling and like doubling down until the other person got uncomfortable and he ended up winning his money back. No, I'm not. No, I've got my own robots that are running from currency stuff. They've been doing that for like the last 7 or 8 years. I was in Melbourne at a conference. I spoke at an algo conference and built some robots for a broker in Australia. So I've got some robots running, but that's currency stuff. All right. Anyway, let's see where we're at. Um, profile changing a tiny bit here. HVL at 7495. I do want to take a look at those defense trades again, just for today. So if I'm playing defense on the put side, so I'm looking for my. Well, I'd like to get the defense in. I just hate that I only pulled in like $1.05. I took $1. No, what's my dude? Where is my? Oh, it's filled. All right, so my $1.05 is my daily profit play. If I start playing defense with small debits like 10, 15, 20 cents debits, I'm just going to make my daily profit play less and less profitable. So I'm trying not to pay too much for it. I'd actually prefer a credit. Let me see if I can do like I don't like this trade as much, but let me see what it looks like. I mean, that one's $1,000 profit trap. It offers a little bit of a credit. That'd be a break even around 35. I don't think we're going to need this defense, but that would cover me for. I mean, we'd be down maybe $1,000 in the. I mean, max risk is 15, so I'd be down. It's not really enough to cover my trade. I want to play a little bit different defense here. Yeah, it's like it just forces me to take on a bit more risk to give that 15 wide. So this is ideally where I want to trade it. 60 by 45. Okay, look, this is totally optional. All right, I don't love this trade, but if I paid 5 cents debit to have a $1,500 profit target on a 15 wide iron condor, this actually makes me feel a little bit better about defense. Is price capable of dropping to 74.30 today? Sure. What would that be for an expected move, by the way? If we drop to 70, where do we open up? If we drop to 74.30 today, 74.30 is a 1+% move to the downside. Could it happen? Yep, anytime. The VIX is over 16, it could totally happen. Probably not worth the excessive risk of if I'm dead wrong, I'm risking $2,000. So if I put in that defense, I'm gonna have to consider another defense trade, which is a little too much. Because if I put this defense in, I'd probably have to put in like another defense trade here, like a butterfly spread, and that's also like just stacking out a bunch of trades that have low probability of profit. So what I'm looking for is, can I play a little defense with a tiny little credit? That's what I'm asking for. And the broker's like, yeah, you can get like a small debit right now. You can have a 10-cent debit. You can have a 10 to 20-cent debit. But if I paid 10 to 20 cents in each one, all of a sudden my daily profit is only worth like $60 to $70, which is fine. But obviously I'm looking at, hopefully try to clear $100 or more today. So do I think we need the defense right now? I will keep it at the credit and just let it marinate for right now. All your orders with options trading only. I mean, most of these are options, yes. So my daily profit play is options. My double up is options. My flashpoint is options. Yes. All right. So I'll put in these for defense for daily profit play. So I'm doing top defense, top and bottom defense. They're optional. These are both pending. Because I'm looking for a small credit to enter rather than small debit. So the 27th. It's all calls here. So 75.80. 75.80. 595. And then the 74.70. 55. For 10 cents credit. All right, we'll see what happens. Right now, we seem to just be hanging out around that 20 to 30 handle. Okay. I mean, it's super, super early for even our XSP trade. This is a double up here. I mean, this trade is worth up to $250. I would consider protecting this one. If I'm up like 125 to 150 bucks, rather than holding it all day, if this is up like 125, $150, I'll probably take it. And if that is pieced with my daily profit play, pieces up, $250 to $300 on the day total, I'm actually okay with that for the day, and just playing it pretty safe. Okay. So not bad there. We will see what the day wants to give us. Let's just talk big picture for a second. So, I mean, my gamma profile here, 75.30 seems to be pretty sticky on the day. I'm positioned in double ups with that, between 20 and 30 is kind of my ideal window. So my butterfly is in here. My iron fly, rather, is kind of peaked out in here. And I'm wide enough that as long as price stays above 74.90 and below 75.60, we should see some money on the XSP trade. So that gives us a pretty decent range. I mean, within like 50, 60 points, if price just kind of hangs out in the middle, that would be great, because that's going to be the center. Not filled on double up yet. So what's it trading for? So I got into it when price was down to about 75.05. That's probably why I got a slightly better fill. I mean, I guess your fill is going to be like 245-ish, 240. You're looking at just a slightly unfavorable reward to risk. It's just under a 1-to-1 at this point, if I'm up like 10, 11 bucks. So this is now showing like 240 debit. All right. So if you took the trade fresh, it'd be like a 240 to 245 credit. You don't have to go this wide either. I mean, you could tighten this up and pay less and give yourself a slightly, this is like risking $1.75 to make 225, but you're just tightening up the wings by one strike. So that'd be going 4 wide versus 5 wide. All right. John says, when I signed up for this plan, well, what plan are you talking about? Under the impression that you will also have high, fast-growing stock trading orders. Who told you that? Like what plan? This is an option strategy for daily income. This is a weekly swing trade in indexes. This is, if you want high flying, this is an option trade on earnings, which I can price out a couple. This is for high reward, low risk. This is a high volatility scanner looking for direction. If that's your plan, it's like you got to be more specific than I signed up for this plan. It's like I got 9 courses. So what are you looking for? Okay. I'll be real honest. I hardly own stocks. I have to love a stock if I want to own it. Otherwise, I'm trading mostly options, because options, you can get way better return on capital for way less risk. I mean, if the stock goes up, let's say a stock moves, 2%. In an underlying option contract, that could be worth, 50 to 100% if you're right. So return on risk is far greater in an option strategy than it would be just owning an underlying stock. And it also costs way more money to own stocks. So, John, I'm happy to field your question, but it's like you need to be more specific with me. What are you looking for? If you're looking to buy stock, I mean, honestly, Roger's probably your guy, not me. I trade most. I'm heavy in options because the return on risk is way better. Let me do this. I thought, oh yeah, I'm going to put this in here. Options. Okay, I built that out. I'll show what this looks like. Let me find my expected move box here. Okay. So this is the expected move box. Give me a ticker. Who wants to trade something crazy like, hey, let's trade AMD, let's trade, Micron, let's trade these high flying semiconductor stocks, whatever. Let's look at some Ivy ranks. AMD 95.7 Ivy rank. Okay. I mean, if you look at the skew on that, that just means that this is price. The call side, put side, it just seems like it should be very difficult for price to keep going at this pace or keep going at this pace. Should be. Doesn't mean it can't, but it should be difficult. 95.7 Ivy rank is crazy. Micron, 105. Like Micron is a candidate. I hate to say it. If it's low enough risk, I might take the trade. But let's go Micron. Okay. We're already seeing a little bit of fade here. Jeez, oh, Pete, this thing bumped up to $1 trillion. I'm going to look at Micron. We're at 105 Ivy rank, and I'm going to put on my expected move box. So here's an interesting play using my expected move box. Right now, Micron, May 29th is still looking for another $70 move. June 5th, $122 move. I am curious if the risk is low enough. June 5th, earnings on Micron on the 24th. Okay, fine. Could we go up here to like the June 5th or June 12th? The strikes are, 10 wide. Let's see what maybe a call condor looks like. If I buy, sell, buy. I mean, it's not a terrible trade. We're at 104 Ivy rank. Could I sell this for $1.20? I'm risking $8.80 to make $1.20, but I also have $1,000 profit trap in here. This one, that's a small debit. Can I make this wider? This one's not terrible. Not terrible, but not great. So what was our high, by the way? Our high was 954. If we keep ripping up here to 1,000, it seems stupid to even try to call this top, but it's like if I went 20 wide, give myself a $2,000 profit trap. Let me see if I can do this up here. So is that right? If I give, I'm risking 940 to make 60, which I'm not stoked about that, but it's the potential $2,000 profit trap. If I want more profit, tighten this risk up a little bit. I mean, this trade is not great to make 50 bucks. So I'm risking 950 to make 50, which is a terrible trade. However, if we get up towards the expected move, which is going to be around that 30 delta, 25 delta, that actually banks a profit trap that's pretty impressive. Now, anything can happen. Okay. ARBE. Okay, fine. I'm getting a bunch of stock. Yeah. So Snowflake, Coco, Micron. All right. We'll take a look at those. Yeah. We'll look at some earnings too. All right. Let me see if this is a dollar. I don't mind this trade for $1. If I get filled for $1, I'm risking 9 to make 1, but I also have a $2,000 profit trap. I'll take this trade. I will take this trade. So if we get $1, this is a big if, but I'm risking 9 to make 1 with a $2,000 profit trap. I'll build this out. Let me see if this will fill. So right now, not going to fill. Let me see. Can it fill for like 90 cents? Not yet. I will not take less than like 75. And that's even still like that's a pretty terrible trade, to be honest. All right, final offer 75. It doesn't fill. I'm not taking the trade. All right, not filling. I'm going to do this. I'll set this up as a pending order. Give me $2.50. So I'm risking 750 to make 250. I'm okay with that. At 105 IV rank with a $2,000 profit trap, I'll let price come to me. Here's the trade. It's a bonus trade, but what I'm doing is the expected move is 152.68. So I want to show you the expected move box. Okay, so 152.68. And I can take this down to any time frame that I want. Okay. So I'm on the 1 hour time frame here. If I look to build out my trade, as long as my strike high is around 1060. Okay. 1060, which is where I'm building in my profit trap. That's what can help me use like the visual side of my expected move box. So this means that the broker is forecasting a 152 point move in the next however many days. What is this, June 12th? So in the next 16 days, the broker's anticipating about a 153 point move. Now, this could be to the upside or the downside, right? If price continues to push higher, I'm going to take this trade for a 250 credit. Now, that's asking price to come to me. That's asking for price to maybe threaten the upside move. But if I get filled for 250, I don't mind this trade risking 750 to make 250. Okay. So here's what it would look like as far as building out the trade. So it's not going to reflect the actual price that I want, but let me see if it'll show it. So I'll go. This will be for Micron, and I'll go out to the June 12th expiration, and I would be buying the 1050, going 20 wide. So I buy the 1050. This is a call condor. So I buy the 1050, sell the 1070, sell the 1090, and buy the 1120. Is that right? Yes. So it's 20 wide trap, 30 wide credit spread, but I'm asking for more credit up front. So when I build this trade out, it shows a credit of about $85. I'm asking for more, but this is roughly what the trade's going to look like. So price is here. And, if price goes up and I get filled for $2.50, I just need price to stay below this level. My break-even price on this trade is going to be ballpark around 1110. So if Micron stays below 1110, I'm not losing any money, right? So I will see what happens. If it doesn't fill, no big deal. But I'm comfortable with the 750. I can max this as a 750 risk to make 250. But this is also a $2,000 profit trap. So if price wants to come up to the expected move, this is tail risk stuff. If this is the expected move and we hit one standard deviation from now at 105 IV rank, I think that's a pretty good probability to play. Because the width of the expected move is so high with that IV rank at 105 that it's very, very difficult for price to like get there and sustain that level. But that's why I'm going to put it in as defined risk. Okay. So this is what I'm going to do. Again, you're welcome to have it if you want it. I'll throw it in the Zoom. It's a bonus trade. You don't have to take it. Know the risk. It's 750 risk for 250 profit. It's not filled yet. It's going to be a pending order. So pending order. For 250. Buy the 1050, sell the 1070, sell the 1090, and buy the 1120. So that 250 credit will set me up for a 750 max risk, 250 profit plus a $2,000 profit trap right around the 25 delta. And a 30 delta is about the standard deviation. So let's see if this gives me an opportunity to grab some profit. Not filled yet. So if price is going to keep trying to go higher, then maybe this gets filled. And I'm comfortable with that setup. So let's go back to Micron. And here's where I put in the expected move box. Okay. So look, why would this trade not fill? Well, if this was the high and we're just going to fade back down, then this trade's never going to get filled at the credit that I want. And I'd have to basically settle for the trade today at like 50 cents credit, which I don't want. I'm not going to risk 950 to make 50 bucks on the trade. Okay, but if I set the I set the credit at a 250, I feel like it's a little bit more fair. It's essentially like I'm risking 750 to make 250, which is not great. But if price is trying to get up to this expected move box, that also brings in a big fat profit trap, and I might land somewhere in here. I might land somewhere where I can keep the 250 credit. Okay. I can also land when this is happening in real time. If we get close to expiration, this bonus profit might kick in early, and I have my bonus credit through expiration. So I might be able to turn that into if I get filled at 250 credit, I might be able to close this thing out for up to $20 credit. Okay. So we will see. But if price falls from here, then this trade's not going to fill. All right. Expiration, I'm doing the June 12th. Yep. So I'll put it in chat. So this is a bonus trade, totally optional. But I just want to show a little bit of okay, I'll use my expected move box in any ticker. I'll look at a high IV rank move like we have some of these semiconductor stocks with these crazy IV ranks. So bonus trade is Micron with a 6/12 expiration. And I'm buying the 1050 call, selling the 1070 call, selling the 1090 call, and buying the 1120 call. So 250 credit pending. And it's 750 max risk, $20 potential profit trap. And break even price, this is the most important thing, is if I get a $20 profit trap, so 1090 plus 20 plus 250, my break even is 112. So 1112.50 is my break even if it gets filled. All right, testing, testing. All right, we're good. We're back. Okay. All right, we're back. Sorry about that. Just switch the USBs. So Dell, crazy Ivy rank. Forecast. I mean, there's earnings, which is this week. Will we have a ridiculous move all the way up here? 16+%. Let's just check some numbers here before I get crazy on this trade. So earnings can make this a little bit scarier, but the high Ivy rank, it's like I just think it's going to be difficult to hit there, sustain there, but we'll find out. 11% average Dell move, if that's right. Dell Technologies. Okay, average earnings is 11.1%. So let's go 11.17 times current price, which is 308. We'll just round up to 309 times 309. So that's a 34-point move. So average earnings move is expecting to be about $34. My expected move box is going to be about 48 to 50 bucks. So here's what I'm interested on. Could I get this trade, again, like a lower risk, high reward type trade? I'll see if I can price this thing out. I'm looking at a move 359 or so. Let's see if I can build out this trade. So Dell, I'm going to go out a little bit further than earnings and see if we just have this market hiccup a little bit. 48.79. Let's see if we go out to June 18th. So the expected move is, up to these levels around 350 to 360. That's out 22 days. That's the market maker move that I was looking at, or the expected move I was looking at. So if I do a 60 by 80, 400 by 420 or 430. So this trade isn't terrible. But again, it's like I want to set it for the take profit I think is fair. That's a $2,000 profit trap. I don't know if that's going to be a good setup or not. 390 to 420. Those are all debits. So that's 20 wide profit trap. Let me see. If I build a $500 profit trap, this could actually be a really interesting trade. If I do a $5 profit trap here and price goes up, but I still have a credit spread, that's really wide though. That's 30 wide for a 5 wide. I'd be asking this thing to give me like, $20 of credit. So that's 25 wide, 2250 or 20. I'll go 20 bucks. Just one way to look at the trade. So I'd be risking 500. I don't know. We'd have to blow through $400 for this trade to get filled. But you know what? I'll still take it. So this is one way. Another one could be a broken wing butterfly. I'll try this instead. Expect to move 350, 370, something like this. So broken wing butterfly, call fly. Could I get filled for, that's 10 wide, $7 credit? I'm risking 300 to make 700. I'd have a break even around, that'd be 397 would be my break even. So if we were to fall off of 400 bucks at all, this trade would be okay. It's like it's pending order. I don't love this one as much. I kind of like this trade a little bit better. If I did like the 310, 315, that's a $500 profit trap. And then I try to do like a wide credit spread up here. That's 20 wide for a 5 wide. Let's see if this will offer up any type of credit. So could I do $7 credit? Let's do $12.50 credit. So risking $250 I'll go 12 bucks. All right. So if this trade were to fill, here's what has to happen. If price goes up and tries to flirt with $400, this may offer a credit because I have a $5 wide profit trap down here. It's really just a debit spread. So if price is greater than 315, I can make $5 on the trade. But on top of that, I'm going to pair that with and kind of finance the trade with a 20 wide credit spread. Right. So in that credit spread, you'd think like, well, that's a lot of risk, right? $15 credit spread for a $5 debit spread. That's a lot of risk. That's why I'm asking for more credit. Give me $12 credit. So I'd have $12 credit plus the $5 profit trap and a $20 max risk. So that's $17 out of 20, which is how my $300 is my max risk for a profit trap of up to $1,700, or I guess $1,200. No, I'm right, 1,700. Yeah, because I'd be getting 12 plus 5. Yeah, so $1,700. I'll take the trade. Pending order. This may not fill, but I'm going on the higher side of the calls. I'm going on the higher side of my expected move box, trying to build a little profit trap. See what happens. Low risk, high reward. Let's see what we get. Pending order. Okay, so again, bonus trade if you want it. Bonus trade, totally optional. Dell, it is a 618. And the reason I'm not, looking at a stock like this and like, well, Chris, if it's 105 ranks, you just sell it. It's high. It's high of your rank. It's crazy expensive to do anything. It's expensive to buy calls. It's expensive to buy puts. You can't really do anything directional. So I'm essentially using my expected move box that I think is like hopefully overpricing the actual moves. I want the IV rank to allow me to sell that premium, collect that credit, make it a low risk scenario, and see if I'm actually right with the brokers being like that one standard deviation or that 1.5 times a move. Okay, so it's low risk. Let's see if it fills. If it is, I'm happy with the trade. If it doesn't, then no big deal. But that's a buy 310 call, sell 315 call. That's my little 5 wide profit trap, and then sell the 400 call and buy the 420 call. And I'm saying, give me $12 credit pending. So it's a $300 risk for a $1,700 max profit. Or even if I get, $7, $8, $9, $10 credit, I might still take the trade and accept a bit more risk, but I'll keep an eye on it. Okay. So a little bonus trade on Dell, Oracle. Oops. Oracle's at a 78 IV rank. I mean, I'm kind of looking at the high flyer IVs at like 100+%. That's such a hard number to sustain. To get to that trajectory of like 100+ IV rank, those usually fade quickly. So here's what I will say. Is anybody going to be surprised to watch a stock like this? Let me hide this. To watch a stock like this just rip up and then fade back down? It wouldn't surprise me. Now, it also wouldn't surprise me if it just goes ballistic and it's like, well, shit, man. Why did I take that trade? But the reason I'm going to that expected move is because I'm trying to get a sell trade that's way up here towards 400. The expected move is about 50 points. So that has me pretty well covered with like broker math, expected move math. It's like, well, we shouldn't really see Dell going higher than like 360. I'm trying to get a trade in for a 400 by 420, which should be pretty safe in theory. But I'm also not willing to take on the higher risk if I just assume it's not going to go that high. Okay. All right. By the way, just spot checking trades today. Iron Condor looking great for daily profit play. Even our XSP double up trade is looking pretty decent right now. It's not enough time, but it's still looking good. So XSP. We're up about $30 on that trade. I will continue to watch this one. It's going to need more time. Let me show this one in the model. So this is XSP 752. So XSP. By the way, let me build out that Dell trade. That was kind of fun to build out. So I'll go option chain. I was going out to the what's the June one? June 18th. So I'm buying the 310, 315 debit spread and then a 400 by 420 credit spread. And it says 90 debit. I'm obviously I'm asking for a credit. So what this actually looks like from here's the expiration. Okay. So what my trade actually looks like is if I'm getting filled for credit, then my green line should be up here. I'm taking in a credit of $12. I'm offering the profit trap of up to $17. And my risk is really tight over here at $3. Okay. So is it likely to fill? Probably not. We probably have like a 10 to 15% chance that it fills. But if I do get to fill, I'll sit on it for the next, 20, 30 days and see if it works out to be okay. Because it's a low risk trade. I'm happy to take a low risk trade for a high reward. Just for price, I mean, Tom, it's way cheaper to go XSP for today. I mean, if you wanted to make money, like right now, you'd be up like $200 on SPX, but that would have been a risk of probably $1,000+. So I just kept the risk a little bit smaller. So today for XSP, I did the 752. So on the call side, I went 5 wide, and pulled in like what was my credit on double ups? 250 something. I pulled in like a 255 credit. So here's the trade. So if we just hang out here for the day, this is looking pretty good. Let's check on when does this start to get a little bit more exciting? Let's check like 1 p.m. Eastern time. So by 1 o'clock today, maybe my trade is up around $40-50. I mean, it's probably gonna be one of those days where it's gonna look a lot better at like 2 in the afternoon, 3 in the afternoon. Here's 2 in the afternoon. That's an improvement. Now we're up about $75. Let's go 3 in the afternoon. Yeah. So this is where all the magic's going to happen. If we can hang on to this thing to like 2:30, 3 o'clock today, and we're still in that range trade, now we're talking probably 50+% return. Not bad. And if we're willing to hang on to it even longer, 3:30. Now we're talking. I mean, full profit's going to be here at the end of the day. So final 30 minutes. I mean, again, if I'm up over $100, $125, I'll probably take profit. If I think that the gamma is looking better to maybe have that pin price be solid for the day, then there's my chance to get the big winner. Is something like in the $100 to $200 winner. I mean, max profits around 255 for me. So I have some wiggle room. If prices above like 750, prices below 754. I mean, if it looks like it's going to stay within that range for the day, I might as well look to hang on to it towards the end of the day. Okay. Stephanie says, do you need to close it to get the profit trap credit? No, I mean, you can close it anytime you want. It's just if you want the big fat profit trap credit at the end of the day, you don't have to do anything. If price is going to settle, if we close at 751 or we close at 753, you're going to be somewhere in here at the end of the day settlement. So you'll be in some profit. It's max profit right here at 752, right? But we can, as long as price is less than 754 or it's greater than 750 today, there's going to be some profit provided at the cash settlement. Okay. Lennon is talking about the Dell trade is a 99 cents debit. I know. So put in a pending order. So what broker are you using? I put that trade in for a pending order. Let me go to Dell. Oops. So Dell pending order. So what I have to do is I tell the broker what I want. So right now it's trading for like a 60-cent debit. I type in my 12. I make this trade a pending order for a credit, good till canceled, and that's my trade. Okay, if I built this out on Thinkorswim, I'll build it out on Thinkorswim. I'll show you. Yep, I'll show you here. Let's go. Dell pending order. It was a net loss bill. I think it was like a $30 loser, $30 to $40 loser yesterday. It was just right in between. I had a partial winner, partial loser, and I think we netted out like minus 30 or $60 or something like that. So I didn't see a net profit on yesterday's double up. Okay, so let's go Dell. Looking at the option chain, I chose the 18th. I was doing the 310, 315, and then the 400 by 420. Just do this for one contract. So right now the broker says, yep, this is an 85-cent debit. Well, I'm going to go negative $12. Good for the good till canceled, and watch what happens here with the review. See how I'm putting this in as a negative 12, and that offers me a $12 credit. So this activates. I'm getting $11.97.30 in credit after fees, and my buying power and max risk is $300. So I tell the broker what I want, and that's going to be where this has to fill me. If I put this and send this trade in and it doesn't activate at $12 credit, this trade doesn't fill, and there is no trade. Okay. Look, I will say that, Stephanie, I'm gonna second that. So, look, anybody that comes into these live sessions, you have to remember, this is my space to talk about whatever I want to talk about. There's a lot of services that I teach. There's a lot of services that I run. There's a lot of trades that we talk about. If you are lost, guess what? I have lots of great foundational education, so you're not lost. Because if I can get you wrapping your head around some option stuff, wrapping your head around, how I see the market, wrapping your head around market efficiencies and option pricing, it's a couple hours of learning. So how do you do it? You either come in here every single day and see me do the same stuff every single day, or you get some foundational education like a one trade mastery, which is a free 70-minute session, or the options whiteboard, or any of my trading 101 videos, or any of my, keep it serious and simple videos. They're all on YouTube for free. And so if this even like sounds interesting, hey, just built this trade out where you can make like $1,700 to risk $200. Yes, it's true, right? The trade I took today, it's like I have a 1.5 to 1 on my double up, and I have like a 95% probability profit on my daily profit play. We do this stuff every single day. Like, that's why I love options. Is we take a trade knowing, here's my expected profit, here's my probability of profit, here's what I'm risking, here's my reward, and we just manage risk. Okay. So anybody that's new, everyone in the community that you're watching, you're all members, right? Everyone that's following me that's been here for many, many years, whatever, jump in and help me out with the new members. Nobody should be coming in here like completely lost and completely intimidated and then, never come back. It's like, we're in the right place. If you want to come and trade, you want to come and learn, I think you're in the right place. It's real trading. So I get it. Like, there's a learning curve with this stuff. I didn't learn options overnight. It took me years to figure out like, what do I need to do to like add some of these option trades and add some like strategies where I don't have to own any stocks and I can still make money and I can trade the market up, down, sideways. Okay. So hopefully that makes sense. So John, you're in the right place, dude. It's just asking you to stick around and, bear with us for a week or two and just be a fly in the wall. Soak it all in. Be a sponge. Okay. Rick, I see can you explain why the profit increases XSP with time? Because it's a credit spread. So like it's a butterfly, it's an iron butterfly, which is a credit. And as time passes, as time decay passes, so as time decay kicks in for us, that gives us that. So as time kicks in, our trade goes from we go back to the modeling here. Here. So right now it's what, 10:54? So here's 11 o'clock in the morning. So it's basically now. So I look at the trade and it's like, oh, congratulations, we're up, $20. But with the passage of time, what do I need price to do? If price is going to stay as time passes, price stays above 750 or price stays below 754, this is the magical thing about time decay when you're an option seller. Watch what happens as time passes. Let's go 2-hour increments. So we'll go from 11 a.m. to 1 p.m. Do you see what happens to our profit? Profit starts to pop up in the center of our profit trap. So if we're right in the sweet spot here, the reason this is going to pay us more is because now that the day has continued in time, the expected move is also shrunk. And it's going to be harder now for price to get outside of our range, which gives us a higher probability of profit. We go another hour, here's 2 o'clock. Same thing. If we're inside of this range, the expected move is going to probably give us a better probability of profit. And therefore, we're still getting on even the 750 area, 754, we're seeing some profit. But in our sweet spot of our profit trap at 752, we're going to see maybe 60, 70, $80 profit. Another hour passes. Now what happens is inside of our profit trap again, we're getting the expected move is shrinking. The day is coming to a close. Maybe the final 60 minutes or final 30 minutes, the market's going to move maybe a couple of points. And that's what we'd like to see is price just kind of stay very stable for us. And then here's 330. And here's 345. And then here's the end of the day. So all we need price to do is stay inside of this zone for us to make money. And if you think about it, if I'm $5 wide and $5 wide, I mean, granted, I didn't get $5 of credit here, right? I got $2.55. So from my center price here, I need price to basically stay $2.50, $2.50, one way or the other, which is essentially like throwing a net out there for a 50-point SPX move. And as long as price can stay within that 50-point move, we should be able to make some profit today. The reason I switched to Option Omega is because I already had the platform as a back tester. So I just added the modeling piece to it versus Option Strat is another separate subscription. I mean, Option Strat's great, but it's a separate subscription. And I was already, invested in Option Omega for my back testing. Dan, I see that comment, man. Good stuff. How does 17 winners out of 20 trades for daily profit play 2 of losers? Oh, there you go. All right. Well, I appreciate that, Joe. More answered the questions. More I was learning. Finally got enough courage to take my first trade. Yeah, that's great. Good. Look, I mean, I'm not here to make anything confusing. I'm not here to make anything complicated. But yes, there's a large range of traders that come in to follow, free sessions on YouTube. People might come in and dabble and find me for the first time. We have newsletters and marketing pieces that go out all the time. I'm on, this site. I'm on this site. I'm working with this. It's like I'm all over the place. So if people come to find me, this is my wheelhouse. This is my like uninterrupted, 90 minutes to 2 hours worth of let's just grind. Let's find some stuff. Let's see if we can find some trades. Let's trade the market. So, what are we seeing today? Well, we're getting a little bit of switch here in the profiles. Right now, again, we're probably still range bound for the most part. I think as long as price holds, this is going to be a key level for today. If we hold above 7495 or hold at that 7500 zone, I think the market might just continue to bounce around through this area. And that's a good sign. If we break, and this is what I said, we're vulnerable. If we break below 7495 today, then we are vulnerable to the downside. You can see there's little to no activity down here. So that's a good thing. There's not a lot of activity. But if for some reason market just goes blech and breaks that level and then rejects it, all of a sudden these zero DTEs can just fill up, and everyone's going to be looking for, the exit. We have a flashpoint trade down here that hopefully is going to give us some pain. We get filled for a reflexive bounce. But it looks like all the heavy stickiness today is between about 7,500 and about 7,550. And so if this is where most of the price action and flows are going to sit, then we'll see if that profile holds for the day. Okay. All right. Yeah, let's find out. I mean, do we look super vulnerable? I mean, would I be terribly surprised to see the market maybe, break 75 and get down to like 74.70 today? I mean, this is the candle that I'm watching the closest as far as a breakdown to 7,500. If we break below 7,500, this candle, I think the market is gunning for it. So, I mean, if you want a really low risk trade, this is a low risk trade for the day as well. It's like a throwaway trade because the probability to profit is super, super low. But if I price it out right now at a 747, this would be an XSP move as well if I want to throw in another double up. It's going to be like a very, very small risk. 747. Let me go into this area. So I can't have the 747 because I have a put there already. I could do a call spread. That'd be dirt cheap if I did a call spread or a butterfly spread. So if I were to go 50, 47, 44, I mean, max risk of $37 to make 263. I mean, that's not bad, right? Max risk here of 4 wide. I risk $75 to make up to $320. So if I'm wrong on my initial iron fly, if I'm wrong here for about $245 and I'm right here, I can make $320. Like that's the trade-off on the day. I probably don't need to be this wide, by the way. I could probably take less risk on this trade. But that way there's even an overlap that if we are, hanging around like 750 or 749, I could probably still make some money on this trade. And in fact, I could actually make an overlap. Okay. So again, this is optional, but it'd be like, 70 cents debit to make up to 320. I guess let me see if I get 70 cents here. Again, do we need to take this trade? We don't have to take this trade. I'm kind of adding another risk into it. But if this trade fills and I'm risking 70 to make 320 or 330, I do like that trade for a potential break of structure. I don't think it's going to break today. I don't think it should. But if it does break, we could easily take out that candle or try to test that area, which I don't think would be a bad spot. So it's a low risk trade, but maybe having some extra defense. Let's see. Let me get this thing for like maybe 65 or 70 cents debit max risk. 65. Not filling. Try the 60. All right, I got filled for 65. All right, so I put in another trade for double ups, optional, but this is more like very low risk, high reward. There's also a bit of an overlap here. So let me build this one out. Go back to my option modeling. Let's go back to the option chain. And in addition to this, I'm going to add in a call fly. So I'm going to do the 747, 51, and 43. And this is going to be a 2 contract. Now, let's see what the chart looks like. Okay. This is current price. I have an overlap in here that would hopefully give me some net profit. So this helps extend my iron butterfly into additional profits here and keeps me, as long as price is, let me find this exact price number. As long as price is greater than 746, we can still make money. So if price is less than 754 and greater than 746, we've got, $50 of profit here net, or we can make up to like $250, like $255 here. That's not too bad. So I'll keep it. And if you want it, you can have it. So here's double up. Let me go double up here. Adding a low risk, high reward butterfly. If price breaks 7,500 today, 74.70 seems reachable. So I'm adding a XSP call butterfly for a cheap defense trade. So 527 expiration. I went and did the 51. Yep. So buy the 751. And these are calls. I'm going to keep it calls and puts so they can I don't have to overlap the strikes. And then I'm selling the 2 at the 747. And then I'm buying the 7 4 3. So that was a 65 cent debit. Max risk. $2.35. No, $3.35 max profit potential. What's interesting is, I guess for the profit on the day, it's like if I lose the iron fly, which would be $245, and on this trade I make a profit trap at the 747. This actually should reflect something like this, because I can make up to like $335 here. So surprisingly, this doesn't look like it's modeling me correctly. So let me see if I can change these for a second. So if I go back to the chain, get rid of the iron fly. So clear this out, clear this out, clear this out, clear this out. This is the trade that I take. You're going to see a big fat profit trap. Yeah. Like that one, in addition to the iron fly, I should have 2 profit traps. So if we pin the 752, it's not going to be as big, but like there should be a profit trap up here around 752. So right up here, and that's going to be about a 750. Where's my 752? I guess here. So it should look something like this. So my goal is to avoid this like dead zone and have, a 747 profit trap and have a 752 profit trap, and see if price kind of hangs out there for the day for some net profit. Okay. All right. So I'll throw that in one-click trading as well. All right. And we'll see what the day gives us. So right now it's kind of hanging out. See what happens around that like 7,500 handle. We are in positive gamma, which means if price stays above 7,495, we should see the market continue to kind of defend that zone. I still think for the day, if I'm putting like my guess of like the day before PCE, no major news today, we're probably going to stay range bound for the day. So if we come back up here and we're between 7,530, 7,520, that's a great winner for XSP for a couple $100. I can throw away that $70 risk or $65 risk and still make some net profit on the XSP trade for double ups. Okay. All right. What? Which one? Does it? Why didn't it fill then? I don't think that's it's not filling yet. My defense trades have not filled. Still have pending orders. I'm showing a 5-cent debit on the call side, and I'm showing a 25-cent debit on the put side. I could probably tighten it up. Let me see again. If I do the defense side today, 70 by 55. If I tighten this up to like 10 wide, I think I want to do. I hate this trade here. It's like I think the 15 wide is throwing me off a little bit, because I want to defend it here, but the best defense for credit is going to be 10 wide, not 15 wide. 15 wide is going to be tough to get a credit on. So let me try this trade. So that's a small credit for a 10 wide defense trade. That puts my break even around 74.50. I mean, that's 10 wide that defends most of my 15 wide, but it's like I'm still taking on risk here. So I don't love that trade. I'd rather go 15 wide and tighten it up. I ideally want this to be a small credit. Even 5 cents credit I'd be happy with. Give me like a $1,500 profit trap zone here at my lows, but make this a very, very small credit or a tiny like 5-cent debit. I'm willing to pay like 5 or 10 cents. I just don't want to pay 20 to 30 cents on a debit. So I haven't had a defense trade fill yet. Not yet. All right, Deanna, let's do this. We have some double up stuff ready to go. If anyone wants to hang out and see one of the most active strategies that I have, which is we trade daily profit every single day. It's going to look something like this for today. As long as price is below this blue line or above this blue line, we are going to have a winner on the day. And that's great. We did the same thing yesterday and the day before that. We have winners of over 92% year to date, over 92% year to date with this year's trading. I mean, if you are thinking, oh, this market's been a little crazy in 2026, yes, it has been, but we've won 92% of our trades, so it works. And we also, have maintained over 550 winners with an 89.6% win rate. My daily profit play right now, looking at the tracker, 89.5% winners on over 630 trades, actually 640 trades combined. And model portfolio is up to about $91,000. That's in about 17 months. So it works. We play the market for what it is, market efficiencies. Play like a market maker. So if you're interested in a daily profit play, check it out. Deanna, if you want to take the screen and let's run a little sesh. For my to-dos for the rest of the week, I talked about the masterclass. We'll get the masterclass up and running for Flashpoint Income. So take a look and see when this is posted. Hopefully by later today, we'll get a new thumbnail for the 526 masterclass. I will also be running through the spreadsheet numbers on my historical testing on Flashpoint to see, if we just take one contract versus a step up versus a martingale, what does that look like? What's our biggest losing streak? What's our biggest drawdown? And have some stats in there. I'll probably just do a video update when I get that done, but it'll be a task for this week. Okay. And as long as price just kind of hangs out here for the day, this could be very nice if we're between, 75.20, 75.30. If price just kind of hangs out here all day long, very indecisive day as we go into tomorrow's PCE. Keep in mind that 7,500 is vulnerable. So if we're below that tomorrow, there may be more downside. Okay. This market is up 8 weeks in a row. Can we make it a ninth week? It's a short trading week with the holidays. Could we make it a ninth week? Yeah, we could. But after ninth week, it just seems like less and less probable the market's going to keep making all-time highs and keep pushing bullish. Okay. All right. Thanks for hanging out today. Thanks, for the new traders that stepped in here and probably were, drinking from a fire hose from a couple minutes, but that's why we have hundreds and hundreds of members every single day that say, hey, you're in the right place. Okay. All right. Go ahead and check this out for the next 50 minutes, and I'll see you later today. All right. Thanks.